Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, this is a show where we'll highlight all the buzzing stocks of the day. It was supposed to be that sort of a day where we would celebrate the Nifty hitting all-time highs. Well, that's not to be. The Nifty is trading in the red as we speak after having a pretty good start. A couple of stocks are in focus. HCL Tech, I don't know what's going on there. Suddenly that stock has taken a sharp U-turn. It's moved into the red as we speak, so keep an eye out on that one. Hexaware as well is under some pressure, so keep an eye out on that one as well. And from the highs, all the indices, whether you're talking about the Nifty, you're talking about the mid-cap space, or even the Nifty Bank, everything's come off the top of the day.
Absolutely, come off the top, behaving like that elusive girl who says, you know, I'll meet you, and then says, I perhaps might not.
That's it. Midweek, you know what's on your
it's
mind.
Wednesday, you know this, Nigel. But tell you what, Yes Bank, that stock is suddenly spiked up. It's at the high point of the day, and this comes on the back of the fact that tomorrow there are the Yes Bank results, so we will watch out for that. In an otherwise weak market, the Yes Bank has now moved to the high point of the day, so that is something that we will watch out for. But first up, all the top stories that we're watching this Wednesday morning. It's an earnings-heavy day on Dalal Street. Capital goods major L&T expected to report a good quarter. For two-wheeler maker Hero MotoCorp, revenue growth is seen strong, while margins expected to remain under pressure. Also watch out for earnings coming in from Jubilant FoodWorks and JSW Steel.
And Asian Paints reports a good operational performance. The management commentary, though, is cautious on input costs going ahead.
Symphony tanks in trade after disappointing in the first quarter. Revenue and margins contract on a year-on-year basis. India business revenue leads to revenue decline.
And Hexaware sees profit-taking post a good performance in their second quarter. The management tells CNBC TV18 that they expect margins to grow in line with revenues. They raise their dollar revenue guidance to around 12 to 13%, despite losing 150 basis points on constant currency.
A CNBC TV18 exclusive. Government mulls selling its entire 73% stake in NHPC to state-run NTPC. If it happens, the deal is likely to be structured on the ONGC HPCL model.
Well, some of the stocks that did very, very well in the last few days, they're giving some of that back. So idea should come up for you. The intraday chart will tell you the picture. The stock has moved lower. We have Jet Airways as well that is seeing some selling pressure, so keep an eye out on that one as well. And Swissalon, it's only a 8 rupees stock now. We saw a bit of a rally out there from those lows. And in today's trading session, it was holding in the green. But now, in fact, it's moved into the red. The Nifty, by the way, is further moving lower. HCL Tech, that's a stock we already spotted. But Bharti Airtel as well. That's the other one that's coming for some profit booking. And Ultratech Cement, yesterday, it played a part in that, in that up move that we saw in all cement stocks. But that's coming for some mild profit booking in today's trading session. But should you buy this dip on the Nifty? Ashwini Gujral is with us. Ashwini, putting that question straight across to you. We're off nearly around 40 points on the day's top. What's the trade on the Nifty from now? Will you look to buy into this dip? Or do you believe we're likely to move lower?
See, no trend changes in a single day or in 5 hours. So, like I said in the morning, that basically this is a sideways market now. So today, the mid caps have stopped performing or not performing as well as yesterday. So this is a dip you should buy on Nifty as well as Bank Nifty. I would expect that we could have a few sideways days between 11,100 and 11,150, and then we take it from there. So far, the uptrend possibly gets violated only below, say, 11,070. So that way, this early morning dip, this needs to be bought, and possibly somewhere in the afternoon, you get closer to the high point of the day.
All right, Ashwini, we'll just come back to you. Ashwini, we have some news that's coming in there. The NCLT has allowed CCI 6,000 crore penalty on cement companies itself. So that's the detail. Just to give you a brief about this, remember this penalty was imposed a few years back. Then in August 2016, the CCI said, yes, this penalty stands of around 6,300 crores approximately. The companies went ahead and they appealed to Compat. And then, in fact, they were instructed to deposit 10% of this out there. And now, in fact, the NCLT allows the CCI 6,300 crore penalty on all the 11 cement companies. Remember, we are seeing a bit of a knee-jerk reaction on these stocks, but keep in mind, this will go to the higher courtrooms as well. We have reached out to some of these cement companies in the past, and they said that they'll go to the Supreme Court. What the NCLT is saying, they find no merit in the cement companies' claims, and all these 11 cement companies' claims. We should get some graphic plates as well up for you. The breakup of the 6,300, you have Ultratech is at around 1,175 crores approximately. ACC as well is in there with around 1,148 crores. So let's try to get Ashmit. I think we have Mr. H.P. Ranina, the corporate lawyer who joins us. Hi, Mr. Ranina. Thanks so much, sir, for joining in. When the NCLT is saying they find no merit in the pleas of the cement companies, and in fact, they are going ahead to say that the 6,300 crores, that stands. Your take on this?
Well, obviously, we have to go by what the appeal court has said. If there's no merit, there's no merit. Now it is for the cement companies to consider whether it's worth going to the Supreme Court. Because merely because you have a right of appeal does not necessarily mean that you should exercise it unless it is a good case.
Okay.
And if after hearing by all the parties, the appellate tribunal has taken the view that there's no merit, then I think they'll have to have a very serious look.
Mr. Ranina, is there a case for now the others, say the likes of real estate companies and the others, to seek damages as well now that the NCLT has ruled against the cement companies? Does this set a precedent?
No, I don't think so. It will depend on the facts of each case. So merely because they have upheld the penalty doesn't mean that the other the real estate companies or others will have a right to proceed against them. There are separate issues involved. So one has to look at the facts of each case and circumstances in which each company lies, thereafter take a decision.
All right, Mr. Ranina, please hold on, sir, with us. We're just getting our correspondent who was at that particular, at that hearing. Ashmit Kumar joins in. Ashmit, quickly fill us in with all these details, and we have Mr. Ranina as well with us.
So what we understand is that clearly this is a huge setback coming into cement companies. This, mind you, is the biggest penalty that the CCI has imposed since its inception. So a huge penalty, 6,300 crore, that's the figure. Of course, it's divided between 11 companies, but all the big names are involved here. Jayaprakash Associates, ACC, Ultratech, all the big names are facing huge penalties. Okay. Now, let's talk about the consequences here. As far as the consequences are concerned, first up, of course, there is the pressure as far as cement companies themselves are concerned. The next issue we'll have to look at is whether or not the NCLT has given a detailed order on whether the scope of penalty can be increased even further. So that's something we'll have to explore. The third and perhaps an equally important angle is that now that it has been upheld, the CCI order has been upheld that they did indulge in cartelization, the 11 companies did indulge in cartelization. What will the bearing be, if any, of real estate companies possibly considering a legal route against the cement companies for seeking damages? So again, that's another important option we'll have to look at. But of course, this is the NCLT order. It is subject to appeal. It can be challenged before the apex court. Yeah. So that is an option that we'll have to wait for a confirmation from the cement companies. If that's a remedy that they choose to exercise. But as of right now, big setback coming in.
Yeah, Ashmit, the last update that we had on this front was that these companies have deposited nearly around 10% of this. So around 6,300 crores is what has already been deposited. Now we need to know whether this 6,300 crores has been upped in the first place?
Well, as of right now, what we understand is that a small portion of the penalty, as is the norm, is submitted while the case is under litigation. Right. But above and beyond that, the major chunk of the penalty, the major chunk of the 6,300 crore will now fall on the cement companies, unless, of course, they choose to exercise their legal remedies by way of a challenge before the apex court.
All right, Mr. Ranina, sir, wanted to understand how long do they have before they can appeal to the apex court? Will there be any timelines?
No, generally they should apply, make a petition within 30 to 45 days. Okay. And that would be accepted by the Supreme Court. And as you asked whether they have to pay the penalty right now, the answer is, in all probability, they may have to pay unless the Supreme Court, while admitting the appeal, stays the payment of additional penalty. Or it is possible Supreme Court may admit the appeal but ask them to deposit another maybe 20-30% of the penalty amount, and only then they will hear the appeal. So there will be a big financial problem for these cement companies.
All right, just take a look at the screen. Some of these stocks had a big run yesterday, Mangalam. The important point now is if this penalty stands and if it's gone against them, and do they have the pricing power? Absolutely. Can they go ahead and increase prices? Because every time, it could be that, they'll be circumspect to this kind of an increase. The stocks have come off a tad bit from the top, but I remember on the day, a few years ago when it was levied, at that point of time as well, the stocks opened up down close to around 4-5%, and they recovered later in the day. Now, in fact, this is going to be important, whether or not they go ahead and they appeal. The problem is, can they go ahead and increase prices post this order, in the same rhythm that they have been doing?
Completely take your point, Nigel. The only analogy that I get out here is what the FMCG companies perhaps are facing right now, given the anti-profiteering clause post the GST. Can they go ahead and actually raise their prices, something that Asian Paints had said as well. We have Tina Veermani of Kotak Securities joining us on the phone line. Thanks a lot, Tina, for joining in. We have the numbers on the screen. Ultratech about 1,175 crores, as well as ACC around 1,148 crores. We understand they have deposited about 10% also, but have they made provisions for this on their books? Is that something that you've seen?
They have provided as not made actual provisions, but they have shown it as a contingent liability.
Okay.
So now the decision has already come against them. So the first step that the companies may take is to challenge it in the higher court. And if the higher court asks them to deposit further amount, they may further deposit the another few percentages of the penalty amount. Okay. But as of now, only 10% has been deposited, and no further provision has been made by the companies in their account.
So if they do
shown as a contingent liability.
So if they do have to go ahead and perhaps put in some more, say 10% more of this, they will have to take it, or they will have to expense it.
They will have to expense the remaining 90% of the amount if they further lose the judgment against them.
Okay.
So in that case, the entire amount would have to be provided by these companies. As of now, only 10% is being provided.
All right, Tina, stay with us. Naveen, what's your first reaction on this? Things were looking so good. We had you yesterday, same time on the show itself. Things were looking good actually for the cement companies. Your initial reaction to this order that comes in?
So, to me, I think it's not the final verdict, I would say. Of course, the companies will go to the Supreme Court, and thereafter, again, I think there will be a decent amount of time after which a final verdict or the final judgment will be out. So to me, it's really not, I wouldn't call it the end of the game, because companies, almost all companies very specifically had written that they have a very strong legal opinion, and hence they didn't find necessary to make any provisions for this. I mean, you can pick up any quarterly result, and this is what a very standing statement made by each and every company has made that. So to me, it's not the end game at all.
Well, Naveen, in your model for all these companies, what kind of importance had you given to this? And now that this has come about, perhaps still not the end of the game, does the probability of these companies going ahead and having to pay this increase, and does that change your estimates, perhaps in the bear case as well?
So, okay, so first of all, we have to see the order, and as the other eminent speakers on the, I think, the show today are saying that they also have to, figure it out whether it's going to be full amount, whether the Supreme Court accepts their plea without accepting the penalty amount and all. So these are all things that we have to see. Of course, the companies will challenge it, and I mean, at best, even if these companies have to pay this amount, the impact will be to the extent of the other income on the treasury income that they receive on it. So the impact, of course, will be there to the extent of the treasury income that they get, because most of these companies have decent amount of cash on books. So that not a very major impact was to change the complete view on the sector, because this will, like I said, will be some decent amount of time which will go into it before a final verdict from the Supreme Court is out.
All right, I want to get Mr. Ranina into this conversation. Sir, what about some of these resolutions that are taking place? We had a couple of big cement companies that were fighting for Binani Cement. Now they have around 170 crores of a fine that's outstanding. Does this hamper the resolution process? And in all probability, what's your guess that the acquirer of these assets will have to ultimately pay that money?
Yes, they will either have to pay the money, or when they make the acquisition, they'll have to say that this being a past liability, it should go to the earlier company. So it all depends. Now, certainly everything is going to be will be under pressure now. And I personally believe that no longer they can hide behind a contingent liability statement in their books of account, because now that the penalty has been confirmed by the appellate authority, I think they will have to make some provisioning. The auditors will now insist on some provisioning.
True. But will it have a bearing on the resolution proceedings, sir?
Yes, of course. It will definitely have.
To the extent of?
Sorry?
To the extent of?
Well, to the extent that the parties wanting to acquire them will now have to rethink about the offer made. That is obviously going to affect them, because it's a huge amount. It's not a small amount which can be absorbed, easily by any party.
Absolutely. All right. Thanks so much, Mr. Ranina, for joining in, giving us your view. And thanks so much, Tina, as well as Naveen, for joining in and giving us your views. So just summing this up, this is a bit of a, a hit to the cement companies, because 6,300 crores, now that's the penalty. If I understand right, 630 crores has already been paid. Now, will they have to pay the remaining money? Can they appeal and get a stay out there, and then they'll not have to deposit the remaining 90%? Or do they have to deposit the 90%? Only then can they appeal. So that's what we are trying to, understand. We'll know all this in the next few days. As Mr. Ranina said, in the next 30 to around 40 days, they'll have to appeal. So that'll all be clear. The important point is, can they go ahead and increase cement prices? I was just speaking to a couple of dealers yesterday. In South as well as in East, prices have been more or less steady. Now, in South, why the price is steady? Because the capacity utilization levels are so low. In East, why they're steady? Because demand is strong. So you will have to keep, we'll have to keep an eye out on that front. And also Binani, it's quite interesting, because we know the two large cement companies out there, they're willing to pay 6,500, 7,000, 7,500 crores as well. So they have to put in another 170 crores. That's the short point.
Absolutely. And finally, I think just as far as number crunching is concerned, Naveen put it right. If they have to go ahead and pay the money as well, in their model, the only tweak is the additional other income that used to make, that the companies used to make on the cash that they had.
Just one more point, Mangalam, I'll be interested to see what ACC does, because they didn't declare dividend in their results, and they didn't declare dividend. So the entire street got excited. They said, finally, ACC, after so many years, they're going to go and do an acquisition. And they have cash of more than 2,000 crores in their books. Now, if this penalty is levied, then suddenly 1,000 crores goes out of their books, So we'll have to keep an eye out on that front as well. Then ACC, suddenly, maybe they'll have to take some debt as well. So we'll have to work on those numbers as well. Yesterday, everyone was celebrating about that. The numbers were good. And in addition, they didn't give dividend, sparking this kind of, of an expectation that they can go ahead and do an acquisition.
All right, a lot of permutations and combinations to work with. Meanwhile, we'll take a short break, come back, and we have a corporate on the other side. Team Lease, the stock on our radar. Stay with us. Welcome back. Chartbusters it is. While the frontline indices are flirting around that flat line, just keep an eye out on Infosys. That one is at the high point of the day, and an otherwise weak day for other IT stocks. We spoke about HCL Tech as well as the mid-cap IT stocks, which are seeing some profit taking. Infosys doing some bit of batting for the bulls. But one stock on our radar right now is Team Lease. They reported their mixed set of numbers, a strong revenue growth, but the margins were a bit of a dampener. To discuss this and more, we have Ravi Vishwanath, the CFO of the company, joining us now on the show. Thanks a lot, Ravi, for joining in. The one thing that really stands out, as far as your margins are concerned, last 3 quarters, third quarter FY18 was 2%. This is your staffing business that I'm talking about. Then it's dipped to about 1.74%. Now it stands at about 1.61%. What explains this weakness? And is that deliberate strategy to grow volumes even at the cost of, say, margins, perhaps?
Not really. You will have to look at the staffing business, together with the amount of funding exposure that we have, in the sense that we follow a business model called the collect and pay model, where it's negative working capital. So up to about 2 or 3 quarters ago, the funding exposure on our receivables used to be 20% of our revenues, and that's down to about 15-16% currently. So while the margins may have dropped marginally, the funding exposure has actually come down by almost about 20% over the last couple of quarters, which means that the interest cost that we would have probably factored into earlier would not be there going forward. So that is a clear strategy for us, because there were a couple of mandates that we did pick up in the market at margins lower than what we would have normally picked up. But that's more than compensated by the fact that they all came in at on a a negative working capital model actually for us.
Okay, all right. Mr. Vishwanath, just hold on to that thought, sir. We have Jyoti Laboratories numbers that are coming in there. Mangalam, just having a look at that. For the time being, it appears it's a little bit lower on the top line, but the margin performance is a little bit better than what the street was working with. So let's keep an eye out on that. Initially, we saw a bit of a knee-jerk reaction. The profit number has missed estimates. The margin performance, though, it appears it's a tad bit better. We'll get back to you after Mangalam has a closer look at those numbers. But Mr. Vishwanath, sir, the positive really has been the number of associate employees that were added. I think in the first quarter of this year, you've added around 5,400, and the entire of last year, you added around 5,800. So what kind of a run rate are we looking at? And for FY19, what should be the total additions?
We expect to maintain, we don't give out guidance in terms of how many people we would add, but I think, like we said, I think the growth that we missed last year, we seem to be back on that, on the associate growth. Typically, associate would be about 15-16% associate growth can be expected in a normal year. We have started off the year with a 4% in the first quarter itself, and as we speak, quarter 2 looks pretty good in terms of associate growth, and so we should probably witness a normal year in terms of our associate growth for this year.
All right, hang in there, Mr. Vishwanath. Just a word on the Jyoti Laboratories numbers. It appears that it is a miss, and that is primarily because the fabric care business hasn't done too well. The top line miss has come in from there, but there are a lot of positives from in the internals of the numbers. The fabric care business revenue has been absolutely flat, but the dishwashing business has shown a revenue growth of upwards of 20%. And personal care, that one's done really well. The company relaunched its Margot portfolio, so out there the revenues have come in at 43 crores. That compares with 44 crores, and the EBIT out there expanded from 1.6 crores to about 9.8 crores as well. I may worry a little about the no increase in ad expenditure for Jyoti Laboratories, given that they were aggressive in increasing their ad expenses. But mixed set of numbers, valuations are supportive, which is why perhaps the stock is moving higher. We'll get you more details on that, but we'll continue our conversation with Mr. Vishwanath. Sir, you know, the specialized business, that one is struggling out there. We saw muted growth coming in. The margins were flat quarter on quarter. What's the plan there? How much do you plan to increase the revenue contribution and margin contribution from that business?
The margins there should start seeing an upward trend, especially in the telecom business. We have gotten into certain areas adjacent to the ones that we were working on, purely from a margin expansion perspective, where certain investments that we made upfront, which is what we did in Q1. We do expect to see the benefits of those investments paying off in Q2 and Q3 as we go forward. Otherwise, I think the specialist staffing margins seem to be on track. The IT staffing seem to be on track, because the focus currently is more on the product and captive businesses, where the margins are much better than the service companies. And so the only area where we have put in some upward investment, which has impacted the margins marginally, is in the telecom business, and we do believe that over Q2 and Q3 we should start seeing the benefits of these investments.
All right, thanks so much, Mr. Vishwanath, for joining in, sir, and giving us those details. Apologies, we're a little short on time in today's trade, but we'll wrap up on the show on that note. The Nifty is trading mildly in the red. You stay with us. Trading Hour comes up next.